Thank you for joining us. My name is Roderick Scott. I'm the board chairman of the Flood Mitigation Industry Association. We are the industry that helps property owners and communities get to where they don't flood in their buildings. Flooding happens, but flooded buildings don't have to happen. So today I'm here to talk with you briefly about this monumental new low-interest long-term loan program called the STORM Act. The STORM Act is a revolving loan program to finance flood mitigation projects. The best way to finance the flood mitigation projects is through a low-interest long-term loan mechanism. The banks are limited on how much they can loan us based on our property values. These projects are not inexpensive and not easy to do, and we had to have a different form of financing. So our organization and multiple other stakeholders have worked for about a decade or more, third administration now, and Congress and the banks, to develop this program that everyone could live with, that would be a financing program of low interest over a long period of time to be able to get these projects done, which we're so desperately needing. So, for example, New York is estimated to have 400,000 of these older high flood risk buildings in FEMA flood zones. That's an enormous liability. Most communities don't even know how many of these buildings they have or what their values are or how much property taxes are coming off of the buildings. So this is a big Achilles heel, a big weakness in our communities going forward because of the flood risk rising and soon the unaffordable flood insurance rates. They're on a trajectory to become absolutely unaffordable, $9,000, $10,000 a year if you're 4 feet below where you're supposed to be on the maps with your home. And those rates are rising for another decade until they get to those actual risk rates. And at that point, we're going to see mortgage defaults, devaluations, and property tax revenue decreases, which is all the stuff that the banks and the Treasury are looking at right now and not wanting to happen because of its impact, negative impacts all across the board. Flooding is our most costly disaster type in this country. Every year it's getting worse. I've just had 5 hurricanes on my coastal Louisiana over the last 24 months during COVID. My community took 9-foot surge in Ida just this last summer, but my community's 80% elevated now and it takes us a week to recover. So we've got to retrofit these communities. This is what it looks like when it floods. We don't know how to stop flooding. We try and control flooding. Flooding is a force of nature that is really intense. We just got to get our buildings so they don't get flooded at this point. We can't afford 100-year drainage or protection unless it's a levee, and levees take 20 years to put in, and we don't have 20 years because of the insurance issue. So this is elevation. This is home elevation. These 2 structures are elevated in my coastal community with no levees. I sit right on Lake Pontchartrain across from New Orleans. 9-foot surge in Ida and a 9-foot surge in Katrina. We had 800 losses in Katrina, flood claims, and several structures disappeared. And in our 9-foot surge in Ida in 2021, we only had 59 flooded buildings. And within a week, we were back in business, except for those 59 historic buildings that we're trying to get them retrofitted so they don't flood. Another form of flood mitigation is dry flood proofing for commercial buildings, churches, meeting rooms, meeting halls, things like that that are non-residential can be dry flood proofed. Dry flood proofing, like elevation, is a proven method of reducing flood risk and reducing flood insurance on buildings. The problem is a lack of financing. The banks can't loan us more than 80% of the value of our property. So we had to come up with a different way to finance these projects over a long period of time with a low interest rate in order to make this available for everyone. So none of this is inexpensive or easy. Here we're elevating a slab on grade home where we elevate the entire slab. So now we have a financing solution. The STORM Act, Public Law 116-284. Have you and your staff look it up, read about it. It's really broad brush. And out of that, we've now created this state resilience revolving loan program legislation that we're encouraging you all to enact in order to be ready for this funding stream that we hope is in 2023 at some point. FEMA is writing rules for it right now because it's a brand new program, brand new way of doing things, and Congress gave it $500 million in the infrastructure bill in November of 21. So we are moving forward quickly, and we need states to get those loan programs into law in order to be able to take advantage of these federal capitalization loans that are going to be made available from FEMA, hopefully again in early 23. So the program is meant to be a low interest, long-term loan program. It's made for cities and counties to use as federal match requirements for large federal projects like drainage or sewer plant hardening. Where's our sewer plants? Right down next to the water, very vulnerable. We need to be able to mitigate against flood damage to our infrastructure as well. And coming up with those matches for those federal projects is tough. But if we could borrow it and pay it off over 20 years, that's a deal we can do and then get those projects going. Or property owners can use it for financing their dry flood proofing for non-residential and elevation for their residential and some non-residential buildings. You see, the banks are the financial marketplace, the whole Treasury, everyone, FHA, Fannie, Freddie are all extremely concerned about the way things are going with the increasing flooding, the increasing cost of flood insurance, and possible devaluations in properties and people walking away from their mortgages. We just can't have that. And we have 3 or 4 million of these buildings we've got to retrofit. So a lot of work, all the trades work, we create jobs. So this program, the beauty of it is it removes our dependency on the minimal federal grant funds that are out there relative to the size of the issue that we've got to address, and puts control into our local government and property owners' hands, and state government as well, because the funds will come down from FEMA to state, state to localities, and then be loaned out to property owners and attached to the taxes. Resilient revolving loan program is the way to mitigate the impacts of our changing climate and increasing flood and other hazards risks. It is also good for wind, fire, and earthquake. So if you happen to have those other risks in your states and communities, then it is eligible to be used for that as well. I am Rod Scott. I'm the board chair of the Flood Mitigation Industry Association, and this has been our take on the state resilience revolving loan today. We hope you learn about it and are able to get it passed in your state so that you can take advantage of a new way to finance our way out of the pickle that we're in. Please do not hesitate to reach out to us. We want to get these loan programs set up in your states so that your constituents can take advantage of these loans and get their properties so they won't flood. Thank you.